Dear students, Assalamu alaikum wa rahmatullahi wa barakatuh. I hope everybody is doing well and in great health. Our today's topic for discussion is partnership liquidations. So, before to talk about the topic in detail, I assume everybody who is joining me here in this lecture must know what is partnership. So, briefly, there are three types of businesses we have. One is sole proprietorship and partnership business and joint stock company or corporation. Today we are learning how we liquidate or how we close or wind up partnership business. So partnership liquidation is one of the advanced accounting topic. Here you learn what is the accounting treatment of each and every step taken during the partnership liquidation. Okay, so briefly, partnership is a business which is run by more than two individuals, 3, 4, 5, 10, right, 20, and each and every individual in this business is called a partner, and there is a partnership deed. When the business is established, and there is agreement between the partners among about the profit and loss ratio, about the capital contribution, and many more terms and conditions, but we are not discussing it as it is not related to us here. So what is partnership liquidation? It is a process where we are closing a business, selling out all assets of a business, right? And the proceeds, the cash we are receiving from the sale of the asset, that is distributed among the partners. We are paying the liabilities, paying expenses, and at the end, whatever at the end is remaining, that is given to the partners. So in simple word, here look, partnership liquidation is the process of paying off liabilities, selling assets, and distributing remaining cash and assets to partners during a dissolution of the partnership. Dissolution is when we wind up a partnership business. Okay, so a liquidation occurs when a partnership business goes out of business, right? Means when partners decide to close a business. So what's the reason behind it? There can be many reasons partners would like to close their business, right? Maybe because the business has become insolvent, or because of bankruptcy, or because of many more reasons behind that. When partners decide to dissolve, right, and close the business, then they are following this procedure. Okay, so a realization is the first step in the liquidation of partnership when the assets of the partnership are sold for cash. So what is a realization? The realization is whenever we take the assets of the partnership business and sell it in the market. Clear? So that is called realization. Now, what are the steps in the partnership business we have? Okay, look, we have 5 steps. The first, we have sale of assets, which is a realization, division of gains and losses. Whatever we receive in cash, then we distribute them into partners. If they are gains, so they are sharing in gains, right? And there are losses, so all partners share in losses. Okay, payment of liabilities, then we are paying liabilities. If there are any liabilities, so the business should pay them before everything. And then if there are some expenses, we call it liquidation expenses, right? That is also to be given. So the first is sale of asset here. Then we divide if there are gains or losses, then payment of liabilities, and then payment of expenses. Okay, we will discuss practically, and then we allocate a debit balance or negative balance. Coming inshallah, we explain it in detail what is a debit balance. Whenever the partner business become negative, the negative is called debit balance and distribution to partners. Okay. So now look, practically we are doing this, how to do it. Okay. So look, dear students, here we have a balance sheet of EFGH for partners we have. And the left side we have the cash and miscellaneous assets and goodwill, and the total asset we have 84,500, and the right sides we have claims, liabilities, and E loan, and we have E capital and F capital, G and H capital. These are we have partners. Okay, so look into the right side, we also have E loan and also E capital. It is whenever a partner, apart from investment in a business, contributing a capital, he can also lend money to a business. For example, if you are a partner, you can lend money and also you can take a part in a business. Okay. So now what are the steps? We have 5 steps. Look here. This is step number 1. We have sales of assets and distribution of losses. So before to start, we must have this data with us. Okay. The first one, asset realized value 31,000. What does this mean? It means this asset we have, these 2 assets we have 68,000 and goodwill. What is goodwill? Goodwill is a good name of a business, a reputation of a business, calculated based on the present value of the future cash flow. Okay, but simply goodwill is a good name of a business. So we have a 10,000 and the miscellaneous asset we have 68,000. Now we are selling almost, if you add them together, is equal to 78,000. 78,000 of assets we have, we realize it, we sell it in the market for how much? $31,000 cash. Okay. And what is the liquidation expense? 4,200 is expense, and this is a ratio 5 2 to 1. Mean 5 means 50%, 20%, 20%, and 10%. Okay, means this is E is 50% and F is 20%, and then we have G is also 20%, and H is also how much? 1 is 10%. Okay, so look, dear students, now we start practically with these steps. Okay, what are the steps? Look, the first one, we should write down here all the balances. Okay, so have to write the balances first. When you want to make a table, so in the rows just put the cash, miscellaneous asset, and goodwill here in this place in the left side, and then EFGH. Okay, so keep in mind, in the assets we are writing down both of them 68,000 and 10,000. We need not to have a separate column for goodwill, so both miscellaneous asset and goodwill are added together and just mentioned here under the assets. So we have cash, so equal sign, just click on cash, bring all the values down, and when we have assets, so add the assets value. We have 68,000 and then added with goodwill. How much is goodwill? 10,000. Then we have liabilities. Okay, how much is liabilities? We have 13,000. Then we have E loan. Okay, keep in mind, very much easy. When the partner is having a loan and also he is having a capital, so the loan and the capital, both of them are added together, so we add them together here. So equal sign, here we have E loan plus E capital. Okay, so other partners, they don't have a loan, so there is no need to add a loan with them, only is having a loan. So F, how much is the F? That is 24,050, and then we have G 16,900, then we have H, and that is 9,750. Okay, so bring all these values here into their respective columns. Okay, now we just go the first step we follow. This is the first one. Okay, sales of assets and distribution of losses. So dear students, okay, now we are receiving how much cash? 31,000 cash. Okay, and how much assets value we are decreasing? That is decreased here. Yes, minus 78,000. It's mean 78,000 that is going out, we are selling it, and instead we are receiving cash. How much? 31,000 in cash. Okay, now how much is the losses here? Easy. If you are selling out 78,000 worth value assets by for cash 31,000, it means we have a loss. How much? This is a losses. Okay, so easy. It's a losses. How it is coming? It means from the assets subtract 31,000, we have 47,000 losses. Now you have to distribute these losses over these partners. It means each and every partner must share in this total amount of losses. Okay, and have to share. We come into E. From the E you have to subtract, minus, write equal sign and then write minus, equal sign, minus. Okay, minus, it means the value what we compute here to be minus from the E capital. So how much is the losses? Click on the losses, and then what is the ratio? The ratio of E, that is 5. So click on 5. Okay, so then you should go next. The ratio is 0.5. sorry, not 5, 0.5. Why? Because 5 means 50%, and that is equal to 0.5. Now just for the F equal sign, and this is losses, and then multiply this with how much? 0.2. So this is 20%, and then we have equal sign for G. Okay, multiply this with 0.2, and to be done for this one also. Okay, multiply with 0.1 here, 10%. Okay, so look, I forgot to write a minus sign here, because you have to subtract all these values. So double click in, after equal size sign put minus, and same to do it here. Okay, why? Because we are subtracting all these values. Now the second step we have is to do payment of liabilities. Now we are paying liabilities. Okay, so what to do? How much is liabilities we have in total? That is 13,000. It's mean minus 13,000 from cash. Okay, and also minus from 13,000 from liability. What does this mean? You know, because when you pay liabilities, then you are subtracting from cash and also from liabilities. For the payment of liabilities, our cash decreases, right? Okay, this is the second step, and now going to the third step, that is payment of expenses. How much expenses we have? Look here, this is the expenses, 4,200. Okay, so come on, when we pay the expenses, so you should minus 4,200 from cash here, and then you should distribute this expenses, right, among all these partners using the same ratio. Mean if you are paying expenses out of cash, so who will share in these expenses? Definitely partner. So again, minus how much is the expenses we have? 4,200, right? 4,200, and multiply with 0.5, 50%, the first one, and again 4,200, and how much is the ratio of the second individual partners? 20%, 0.2, right? And also you can just drag it into the left, right? So equal sign, again minus, you must mention minus, right, minus, and then multiply to 0.2, and the last one, okay, 4,200, and to multiply to 0.1. I hope you can understand me. It's so easy. Try not to be confused in. Okay, now what we need to do, we have to compute the balances for all of them. Okay, look, just write equal sign here and sum. take in the range all these values, means add them all together. So we have 20,300 in balance, and drag it into the right. Got it? Easy. Okay, it's mean after the payment, after the distribution of losses and the payment of liabilities and the payment of expenses, how much cash is remaining? 20,300 at hand. And how much is the claim? Okay, if in G and H they have a positive claim, positive value, and the E claim is negative. Okay, let me explain this point, very much important. Why the E is negative? Because the E capital and loan, both of them, if we add them together, cannot pay the losses. It means the losses are higher than the total investment of the E. So that is why the account of E has become negative. It means the E have to manage this amount from outside sources and to pay off this amount. This is a loss. Okay, one question some students asking here, that why we are not treating the loan of the E partner like a normal liability. For example, here we have a column for a liability, and we are paying this liability before everybody, before everything. We are giving a preference, because this is the creditor. The reason behind, because the liability we are just taking from a creditor, a third party who is not the owner or who is not a partner, but the partner is a person who is the owner, right? So that is why each and every partner is having unlimited liability. Unlimited liability, by the way, means if the losses of the partner is higher from his investment, then he has to manage this amount from outside sources, right? From outsources. Okay. So dear students, what you have learned here, simply you learned here that we have 4 partners, and among them one partner is having a negative balance and the 3 remaining have a positive balance, and now the negative balance should be allocated. Okay, question here, why we are not paying the loan of the E? Why we are not paying the loan of the E before everything, like we have paid the loan of the liability of the third party, right? The reason behind, because we are just telling the E partners, right, to wait until we compute the whole losses, and to make sure if he is having a losses, then we have to retain and we have to deduct the amount of losses out of his loan also. It means there is no logic to pay the loan of the E in advance, right? So that is why the losses are not yet clear. So we are just awaiting the payment of his loan up to computing what? The whole losses. So still here you see, even if we add both the losses, both the loan and also with the capital, and still cannot pay the whole loss, and still the amount, the account of the E is negative here. Okay, so what we are doing here, we are allocating the E balance. And how to allocate the E balance? Very much easy. We are just taking from F some value and edit here, some value from this individual and just edit here, and some value from H. Okay, so it's mean we have a ratio. What is the ratio here? Look, we have 5 2 2 1. This is the ratio. Okay, now what is the ratio? This one has become negative, so it's mean this is negative. Finish. Okay, why? Because anybody capital is becoming negative, we are crossing his ratio. Okay, now what is the total? How many individual with positive balance? 3. So the ratio of F is 2 and this is 2 and 1 is equal to 5. Okay, it's mean what is the new ratio we are deriving here? The new ratio for this individual is 2 or 5. Okay, okay, let me just make one point here. Just wait for a minute. Okay, so slow. Okay, so here we have number fraction and just make it this one up to 1 digit. Okay, yeah. So the new ratio we have 2 or 5 here and 2 or 5 here and 1 over 5 here. Okay, look here students. Okay, once again let me revise a point here. Here this balance is negative, then remaining we have 2, 2, 1, add them equal to 5. Now 2 over 5, 2 over 5 and 1 over 5, these are new ratio. What does this mean? It means we have to take 2 over 5 value, the value multiplied by 2 over 5 and add it here, and 2 over 5 from here and 1 over 5 from here. Okay, okay, have to do it. Look here. Now equal sign and then multiply. How much is the total value? 4800, and multiply this by how much is the new ratio? 2 over 5. And also here equal sign 4800 multiply with 2 over 5. Okay, you can also click here 2 over 5, and then again equal sign and then 4800 multiply this with 2 over 5. So easy. So we have subtracted from this by the rate of 2 over 5, 2 over 5, 1 over 5, and at 4800 here. Okay, wow, it's clear now. Okay, so here 4800 we have added with this individual and we subtracted by this ratio from each and every individual, and this is called allocation. Allocation is because one partner balance is negative, then we have to take from each and every individual amount by the remaining ratio of them, whatever is the ratio, and then we are adding back here 4800. Now balance it, equal sign, and from the balance take a balance plus and this one. Okay, it's mean the last, you have to add the last two columns, these two columns. Okay, so I have added the last two columns and just drag it into the right. I hope you got it here. Now dear students, look here, this balance has become 0. Now it's quite understandable that we have this much cash, 20,300 cash, and this is the claim we have, the total claim we have. Okay, from the partners. When you add all the claim must equal to 20,300. So what we are doing in the last step is just giving 20,300 amount into FGH. We distribute them into FGH, simply the last step. Okay, so like here minus means we are paying the cash, so when we pay the cash, so amount is decreasing. Okay, then also the capital is also decreasing here, and also the capital decreasing here, and also here. What we have done here, we are paying the cash, so the cash is decreasing, right? And when we are paying to the partner, the capital of the partner is also decreasing, so that is why all the values decrease. Now at the last two rows, balance, right, and balance it. So when you drag into the right, wow, everything is 0. What do we mean by this? Simply it's mean we have 5 steps. Okay, in the first steps we sold the assets and we realized a new value from the market, and there is losses. We have distributed the losses, and we have paid the liabilities, and we have paid the expenses, and then finally we allocated the balance of the E. Which balance? This E balance. Okay, here is negative. Dear students, this negative balance which we have allocated, this is called also debit balance. It's called which balance? DR, debit balance. Simply any individual, any partner's balance when become negative, we call it debit balance. Okay, now we have allocated the debit balance also, and finally whatever left out in cash at hand, we have distributed them into the partners. Okay, so I hope you got it. Now what we are doing, now we go into the final step, and that is transactions. Okay, now we have to measure and figure out what debited and what credited. So much easy. So come here into the first step. We have here, we have cash. Whatever debited, we make it in yellow. Okay, so cash increase or decrease here? Cash increase, right? Positive value. So increase is what? Debit. And any value which decrease, which is credited, make it credit. So make it red, right? And make it this blue color, right? So look here, this one increase in cash, that is asset debited, and decrease in asset credited, right? And this is capital, this is in a bracket, decrease. So decrease is what? Decrease is debit. So we make debit yellow. And this is also debit, and this is debit, and also H is also debited. Okay, so coming to the second transaction, we have paid the cash. So when we pay the cash, so that is actually credited, and the credit value we make it blue, right? Okay, in liability decrease, so decrease in liability should be debited, and make it yellow. Okay, so coming to the third steps, we have payment of expenses. So here we have a bracket, cash decrease or increase? Decrease. So decrease in cash, that is what? Credited. Okay, so credit, make it blue. And here we have decrease in capital, that is debited. So make it debit. So debit, and those also debit, F4 for repeating the function. Okay, and then H also debited. Now coming to the fourth step, we have allocating E balance. So here the capital of E increase. Okay, increase in the capital here. So you can say increase is what? Increase in the capital, that is credited. So make the credit blue. And now decrease in the capital, that is debited. So debited and debited and debited. Okay, okay, now we have the fifth step. Here we have a cash, and the cash is cash decrease. So decrease in asset is what? That is credit. Okay, so make it blue, credit. And here decrease in the capital is debit. So make it debit. So this is debit and debit and debit. So look, this was transaction. Now we can quickly record it in the journal. You can make a journal entries for this. Okay, I have to do it. Okay, what we are doing here, just past transaction. So look here, we have cash. Cash is how much? The first transaction, the cash debited, how much? 31,000. So write cash debited. Okay, sorry, let me make all the table values. Okay, so how much is, first we have cash. So the cash here debited, how much? 31,000. okay. And then what credited, okay. Also E debited, so you have to E debited, F debited, and then G debited and H debited, okay. So how much E debited? So equal sign E debited for 23,500, E debited 9,400 F and 9,400 G, and how much we have here? 4,700 H, 4,700 H, okay. Now what credited here? The value assets credited, okay. So let me just increase one row here, okay. So this is H, 4,700, okay. And what credited came assets credited. How much? 78,000. I hope you got it. Look, this cash debited, E, F, G, H also debited, so we debited all these values. Clear? Remove this value here, and then we credited assets, so this value of assets credited, okay. Now into the second transaction, what debited here? This is liability, so liabilities account debited 13,000, and what credited? Cash credited, so cash account credited 13,000, okay. This is about liabilities in cash, okay. The second one, now we have expenses, payment of expenses. So in the expenses, look here, we have the cash, right? So the cash here credited, why we have paid, this is negative. And what is debited? E, F, G, H debited. So an expenses E, F, G, H debited, okay. How much? E, 2,100, okay, 840 and 420, okay. And how much is cash credited here? Sorry, here that is 4,200. So credit a cash account, cash 4,200, okay. Okay, this was about cash, E, F, G, H credited, debited, so we have debited them, and cash 4,200 we have credited, okay. Now next we have after the payment of expenses, then we have allocation of E balance. So here we have E account increase credited, and FGH debited, so you have to make FGH debited, FGH debited, right? Increase one row here, this is H, okay. Look here, we have FGH debited, how much? 1920, 1920 and 1920, okay. So here we have a mistake, I think. How much? This is 1 over 5, not 19, so this is 1 over 5, so sorry for this value, make it 1 over 5, okay. Why 1 over 5? The reason why, because here is 2 over 5, and here is 1 over 5, so that is why we have done mistakes, so correct it, okay. So it's mean FGH, these three values debited, right? 1920, 1920, 1960, 1920, 1920 and 960, okay. So these three values debited, so we have also debited here. Now what credited here? 4,800, so that is E account credited 4,800, okay, dear students. Finally we have cash here credited, and FGH debited, so we debit FGH debited, right? And what credited? Cash account credited. So 11890, this is F, and how much is 4740, and then we have H 3670, and finally how much is cash credited? 2300. Okay, 2300. You see the mistake? What? Okay, the value, copy and paste it here, then the debit. Okay, so these are credit. Okay, dear students, look here. First 5 steps we have. You have to just highlight the values, which value debited and which value credited, and then you have to make the journal entries and record all these 5 steps in the journal. I hope you got it, and I assume you know about the debit and credit concepts to record all these transactions. Wish you good luck. Assalamu alaikum warahmatullahi wabarakatuh.